afternoon. Hi, everyone. Thank you very much. Bonjour. Assalamu alaikum. So, this afternoon also we're actually discussing another key topic for UNEP members and for the Sustainable Finance Agenda, the African Business Vision, which is climate mitigation. So this workshop will be, of course, about navigating the climate mitigation journey. It's about the climate mitigation journey of banks from the African East region. Of course, we'll have a lineup of distinguished speakers for that. But before, I just wanted to present you this slide, and which is perhaps how they use sometimes in the daily life of a climate finance, climate banking professional. That's perhaps my cousin, beside me. There is, of course, various climate works on risk management, materiality, reporting. Of course, an evolving ecosystem of actors are doing a great job when it comes to supporting the climate mitigation of banks, other actors, of course, but also the evolving regulations, the evolving policies that commercial or climate banking professionals are exposed to, and regulations are changing regularly in our region. So in order to address some of these challenges, alongside other challenges, the lack of a universal and accepted meaning and definition of what is climate mitigation for banks, also the complementarity between the different climate mitigation frameworks, policies, and guidelines, and also, as I mentioned, the increasing and expanding presence of several actors in the field, as well as the evolving methodologies and practices, and also variety when it comes to maturities across banks in the region, and most importantly, as you know, the limited internal capacity and specialized skills when it comes to climate mitigation. And for that purpose, to address some of these challenges, UNEP alongside partners, we introduced a concept called the climate mitigation journey. French, parcours, la direction climatique, and Paris Arabic, Massad Khafif, So the UNEP climate mitigation journey is actually a climate strategy. There are clients, all the climate technical capabilities that banks can advance throughout their whole journey. So the CMG, climate mitigation journey, is actually providing an overview of the practical steps that banks can take towards this long journey, and represents a long-term journey. Of course, in order to align the national climate emissions with their outlined indices or national climate priorities, or if the banks have their own climate targets, perhaps aligned with the Paris Agreement objectives. And from a UNEP perspective, of course, for the banks that identify climate mitigation as a priority, we're actually using the CMG to translate the UNEP PRB into practical steps that we can take. And the CMG can be used for various purposes by banks. At the top level, it can be used, of course, for planning purposes, helping FIs identify long-term climate plans and also the decarbonization strategies needed. For a maturity assessment, so banks can use this tool to assess where they are vis-a-vis each one of these capabilities, climate risk management, reporting, and so on. And also for capacity building purposes to identify the precise capacity building needs they are willing to address, and of course for visualization purposes to address the specific national context in the countries of operation. So the CMG, the wheel, or the pizza, or the camembert cheese, 50 slices, which is so generous to share, is actually composed of three big blocks. The first block are the core climate capabilities. This is about building the strong foundational capabilities that will help banks develop an operational capacity for climate mitigation. Impact analysis, climate reporting, climate risk management, carbon accounting, and governance. There's also a second or intermediate level of capability capabilities called what we call commitment target setting capabilities. It's about ambition, target setting, and accountability. So this is about clearly outlining the economic ambition of the man. And of course, another big piece, which is implementation, which is about transition planning, data solutions, decision making, target operating models, engagement, and decision making. And of course, there is the policy and regulation. So there is cross-cutting across the three groups. We're not going to go into the details. Perhaps we're going to let our speakers provide insights on how they actually conducted this kind of training from their perspective. But just maybe very briefly, impact analysis, process about some lessons conducting the portfolio analysis across business lines and sectors to assess, identify climate mitigation as a strategic priority. There are, of course, a breadth of materials available either at UNEP or at our partners' portals. Climate reporting, the importance of climate reporting, especially if there are any regulatory requirements for that. And some banks, for instance, have established dynamic real-time climate reporting capabilities in line with the global frameworks that we know, GRI, TCFD, CDP, as well as national requirements, and of course the upcoming SSB. Reporting requirements, governance, very important. It's about establishing important teams, providing them with the necessary tools and capacity when it comes to incorporating climate in their roles and responsibilities, carbon accounting, and our expert from PCAF addressing this topic, and so on and so forth. So again, the purpose is not to go in details and explain each one of these capabilities. We have, of course, webinars for that. We're also hosting a more specific workshop where we're going to go through all of these capabilities. And now I would like to invite the speakers for this panel, starting with Mr. Shargiil Bashir, who is the Chief Sustainability Officer and Executive Vice President at First African Bank. So if you can welcome Mr. Shargiil Bashir to stand. And since we've been watching football games last night using the football jargon, also welcoming a distinguished speaker from a big football country in Africa, Bafana. Welcoming Boitumelo from South Africa, the first host of African local, Boitumelo. Sethlatswe is the head of sustainability at StepChange Group and also co-chair of UNEP Banking Board. From another great African football country, Ghizlaine, Nourlil from Morocco, from the data science of the last World Cup. So Ghizlaine is actually the Finance and Mobilization Sustainability Group Director at CDG Group, because they did both very strong. And Eslam, who is Egyptian, but also is Associate Director of Sustainability, Guidehouse, an African Middle East regional lead at PCAF, and also is a big fan of a big Egyptian team called Mahdy. He's a big fan of Mahdy, which is one of the big teams. And of course, last but not least, Badri, Seetharaman, who is Director of the Middle East and North Africa at StepChange, and also a big fan of football, but also of cricket. So thank you very much, and I'm going to let you on the course. First of all, thank you very much, colleagues, for joining us for this discussion on navigating climate mitigation during the Middle East. And the purpose of this session is actually to provide some of the ingredients from banks that are leading the region, but also from technical organizations on several topics related to climate mitigation, whole process and journey, and maybe starting with climate mitigation strategies. Just before that, for the purpose of this workshop, I would like to introduce maybe a practice which was suggested by my colleague Nourlil at some of the CMG workshops in Kenya. If you have any questions, so of course we're going to provide you a microphone for that, but please, we have papers and pencils on the table. You can use them. If you have any questions that you can address, and my colleagues will make sure at the end of the session to collect them and we can discuss climate considerations into both your operations, but also the decision-making of your bank through the whole stages of the CMG. Of course, we can illustrate with some concrete examples for the audience for them to learn about it. So we can start with Ghizlaine, then go to Shargiil, then move to Boitumelo with questions on climate risk management, and then we can answer.
Thank you, Youssef, and thank you, Amplify, for inviting CDG to this panel. So you talk about ingredients. So we are in the beginning of the journey within the group. When I'm talking about the group, I'm talking about the different, for the audience, if you are familiar with the group CDG, we are a multi-activity group, starting from financing, investing, territorial development, tourism, etc. So we have different activities, we have different impacts, and we have different journeys. So subsidiaries are really in advance in comparison with others, so we have different speeds. Starting 1923, we decided to set in place a common trajectory, a common strategy, common policies in order to have the same trajectory for the climate and sustainability journey. So we are in the beginning of our journey. We started by setting in place the infrastructure, by having the involvement of the top management, the ownership, the commitment of the whole board directors, including composed of from different managing directors from different subsidiaries and branches, to build this same trajectory around the strategic action plan, which is called CAP 2030. So we have 2030 as a deadline. So we have to set in place the right governance in order to ensure that the strategy, the policies, and the internal control are really in place in order to monitor, in order to implement, and to measure the improvement of the different approaches within the CDG group. Since we are not only a bank, we have different other activities. And we would like, we already started, we are already aligned with the national requirements and regulation, but we would like to go beyond. So we are comparing ourselves with our peers, so the different other caisses de dépôt et de gestion, so caisses de dépôt françaises, caisses de dépôt italiennes, and other caisses de dépôt in order to improve our operations and our decision-making process. So, since we have the infrastructure in place, we have conducted the analysis in order to see where we are and where we want to go. So, we started the exercise, so we identified our baselines, and we run the exercise of the CAP analysis using some models and some standards. So, for the climate parts, we have already measured our exposure to the physical and transitional risks. And for the emissions, we have already measured our portfolio composition using PCAF methodology. So in order to have a really to run the scientific exercise, since we have identified that climate is really for us a material topic, when we have the exercise of double materiality to set in place our strategy, and with the UNEP tool as well for the impact assessment part, we identify that climate is really a material topic for us. But the difference between the two exercises is that for the double materiality exercise, it's based really on perceptions. It's a qualitative exercise. The other tool from UNEP is a scientific one. So, and we decided to have the methodology to pick up in order to understand our portfolio, our participations, our transition plans, to place our transition plans, since we have the reinsurance, the only reinsurance company, Atlantic Rate, according to you yesterday for panel as well. So the only reinsurance company in Morocco, and the only reinsurance company having coal assets in the portfolio. So we have to set in place a transition plan in order to compensate our emissions. So baselines, we have as well, we are working as well on our risk cartography and management, so to include climate risks within our credit model, operation, market model, scenarios and stress analysis, stress testing and scenario analysis, and to create a new credit rating methodology to include our decision-making process. So, since we are considered, we are not having mandates as public development bank, we are considered as public development. We are financing now external projects. So historically, we were financing only our entities, our subsidiaries. Now we have an ambition to develop the financing external part, so with some partners, so local and international. So we started to finance infrastructure projects. So regarding the climate part, we already finances with the local partner, what we call here the highway, the water highway. So we are not in the mitigation, we are in the adaptation part. Since we are a public development bank, we should have an impact on the adaptation part as well. We are not competing with the commercial bank on the mitigation side. We would like to develop this activity by ensuring the principle of additionality. So we can finance with the long maturities, with the interesting rates. We can as well bring to the table specific expertise from our subsidiaries and the technical side. We can bring to the table specific expertise on the investment side, on the financing side, on the legal, etc. So we are a larger group. We are having some different skills in different backgrounds. We would like to make the profits of the different projects and infrastructure. The most important thing is the data collection. So to monitor the improvements, which is really difficult, since the carbon emissions or climate components are not already designed in the first infrastructure systems we are having. So it's really difficult. So we are working on it as well in order to see how we can optimize our portfolios, how we can measure, and how we can deal with the different assets and transactions. An important thing as well is the budget and resources. So financial resources and human resources are really key to success in this journey. So we still have a lack of resources here locally in Morocco. So we are looking for different profiles, for different talents, but it's really important because the skills are different, the backgrounds are different, and we need really people that understand the scientific, they have the scientific background to measure and to monitor the improvements. So budget, risk management, data collection, involvement, governance. Yes, we have in our CAP 2030 program, we have prioritized the sectors that have really an impact on the climate side. So we are talking about water, we are talking about energy transition, we are talking about sustainable mobility, we are talking about everything related to ODB. So we are working on it. We would like to develop a portfolio on it, and we are working with the different subsidiaries and branches to improve their emissions, their direct and indirect emissions. Once the exercise is done for the diagnosis part, we discovered that regarding our direct emissions operations, we don't have really a huge impact. We are having impact through our portfolios, through our participations, since we are investing in different large companies in Morocco. So we have to handle with this. We are working on a transition plan, how to prioritize green assets, how to lower the brown assets. So it's really very difficult and complex exercise. We know, we are all convinced that we cannot really do it in like this, 30-60-degree shift in one time. We are conscious that we need time. We need to change culture. We need to work on the capacity building side in order to allow people to understand and to move as well with us in this direction. We are involved for the culture, developing the culture and the capacity building with different working groups of UNEP, D20 long-term investors, IDFC Club. So in order, and we are member of we benefit from the climate facility from the IDFC Club in order to work and to sensibilize and to train people on how to make in place mitigation or adaptation strategy, how to measure, how to set in place an ECB-SMS and environmental and social management system, and the very difficult, tough topic is the climate and how to measure emissions.
Thank you very much, Ghizlaine. Very insightful. Maybe turning to Shargiil. What's the secret from the experience of that?
I think, let me start with the cliche we often speak about, right? But I think in this case it's super true. In order to embed sustainability, you need to make a culture of mobilization. I think, everybody speaks about it, and, we developing a policy, whichever policy is being developed in your organization, it should come by your table to say, is there a ESG or sustainability angle to this policy? If it's a development of a new product, if it's a marketing campaign, if it is any operational initiative in your organization, you need to look at it and say, is there a sustainability or ESG angle? And then, of course, I fully recognize that budget and resources is a challenge for all organizations, right? We don't have unlimited resources, so it comes down to prioritization. But you need to create a culture that all of your colleagues understand why is sustainability important and why do you need to have a touch point on these things. Otherwise, you will not create that culture. And if you don't create that culture, you're not going to get that buy-in for every single employee who will prioritize sustainability and ESG into their work, which is important because if you need to transform your business and you need to have embed sustainability, you need to make sure that everybody needs to own that, right? And earlier we had this discussion around client engagement, but this also comes down to every other employee because we all have colleagues who are client-facing, but we also have colleagues who are not client-facing, right? So we also need to remember what is the sustainability and ESG angle for them, right? So for us, it was very important when we developed our ESG strategy back in 2021. Our core focus was that we want to embed ESG into everything we do, right? And this was a clear leadership mandate from the CEO from the top, and anything that landed on the leadership's table, the view was the ESG angle of this? Had this been considered, right? That put, of course, heavy pressure on us that, how do we prioritize it? How do we work on this? And do we have enough resources to do this? But this is what is needed. So again, client engagement was discussed earlier, but this also comes down to operations, right? All the small good examples, right? We need to highlight how do we make sure that we remove single-use plastic, right? How do we ensure that we reduce printing? How do we ensure that we use more recycling elements of your organization? You need to make sure that every single angle of it gets embedded somehow. And I think that's an important part of the culture, right? So I think once you have that foundation, then we can start continuing discussing climate risk, we can discuss transition risk, we can discuss all these things. But unfortunately, if you don't create a culture, it's just going to be a silo somewhere where you will sit in your own bubble and discuss climate risk. You will not be able to get it embedded in your organization if you don't create that culture. That's why that ownership of everything, like for us, the sustainability department in First Dhabi, we're just an enabler for all our colleagues to get an understanding of sustainability and what that means in their specific role. It is their ownership, right? We are just a steward. We are just here to guide them. It needs to be their ownership. They need to own this, and that's why when we speak about it, and I think I've said this many times before, and I'm happy to do this. I think that for me, one of the key tools ever from a sustainability angle, and I don't know, I haven't seen all tools of UNEP, but for me, the CMJ climate mitigation journey is one of the key tools, and I wish that we had this tool back in 2021, because I think this has been critical for us in our journey, right? Because this takes you through every single aspect you need to go through in your journey. And this is whether you're a bank that is just starting your journey, or you're a bank who is maturing, or is a bank who's advanced. This is a tool that is useful for every single one. And I think that this goes hand in hand with creating a culture where you make sure that sustainability is taught through in every single aspect of your organization. Whether this is regarding reporting, product, communication, social responsibility, client engagement, you need to make sure that sustainability has a role to play in all those disciplines. And it's your responsibility to guide your colleagues, but then hand over that ownership that they need to make sure that this gets executed. And the key culture is that you have that leadership support, right? And that if you don't have that, it's going to be an uphill battle. But once you have that leadership support, that is a critical aspect of that. I hope that answers or gives us a perspective.
Thank you very much, Shargiil. We heard culture, the role of culture and leadership in embedding considerations of the word, the work materiality. Maybe also like to ask Boitumelo, how did you embed climate considerations into standard bank groups, internal policies and processes, and maybe focus on climate risk management, capability, if you have any insights on how you actually worked on climate stress testing, since the exercise was conducted in South Africa by the regulator. So how do you work on management and of these exploratory climate stress testing in South Africa?
I think for us, I like we always joke about using the word journey in the bank because it's like this long-ending expedition. But I think it really captures the complexity of doing this work. It really has been quite the challenge. I think it's been particularly challenging because for our teams and the teams broader in the group, we are all learning by doing, which is quite a daunting task because we're doing something that's new, that is very strategic, that has a lot of scrutiny on it. And so I think that presents itself with a lot of challenges, given that there's also quite this high level of external expectation around it. I mean, our journey starts probably in 2019. We really sat and thought about we need to have a refreshed approach when it comes to ESG reporting. So there was a governance framework in place that we refreshed. And it was at that point that it became very clear that we needed to have a position that was well articulated around climate change. And I think until that point, you had your environmental considerations more broadly within your credit policies, your EMS standards and the like, but it was particularly to start at that point. And where we started, which I think is the evolution you see everywhere, is we started initially with a coal and a thermal coal policy. That then expanded where we now thought, okay, let's look at fossil fuels more broadly in 2021 and then in 2022 where we now have a group-wide climate policy. And the climate policy has been very important in establishing the tone around what we seek to do. And I think this is where this idea of double materiality, context, is very important. So when we developed the climate policy, what was very important for us is that we are an African bank that serves African clients, and we understand the challenges that I will not even begin to speak about that have been expressed throughout the last 2 days. And so what does that mean? And so any policy needs to have that, I want to call it the flexibility for us to be able to support our clients, but also achieve the commitments that we've set for ourselves. So we have a net zero by 2050 commitment, we have a net zero commitment for our own operations. But to say that this climate policy really tries to look at both sides of the coin, so really to articulate what are the opportunities, and then secondly to also be very clear about how we manage the risk. And we integrated the climate risk sort of function into the group-wide enterprise management risk function. But what we also found is that because it's such a new area, we did look at it as a standalone risk. Understanding is transversal, but looking at it from a standalone risk perspective. And I think that's really sharpened the focus that's been given in the organization. We have a small team that sits within the group sustainability team, which is mine. But the point is that, as Shargiil says, this team is an enabler. It's an enabler of getting all of this done. And so we were quite deliberate that this team, we set up a program, a 4-pronged program that really looks at governance and operating model. And I think this can't be underscored because it's so new. we're developing capabilities, we need to develop ways of working, we need to understand first, second, third line, what are the rules for everyone, so that became quite clear. I think the other program within this risk management framework was that it was very important that we understand data, we put in place data governance and data architecture, and all colleagues in the room appreciate the difficulty here, but I think it really, we see it in climate, but it's actually a broader bank issue. If we think about any sustainability related information, it goes beyond climate for that perspective. I think also being very transparent in our metrics and disclosures with another program within our risk, but then to reflect on stress testing and scenarios. So this is also one of the programs within our climate risk work, and what was quite great to actually test was that we set up this risk management framework for climate, and then the SARB, the South African Reserve Bank, came forward and said, we want to actually conduct an exploratory stress test. It was looking at both the physical and transition risk. It was looking at our credit, and essentially what this test enabled us to do was to be able to essentially stress test our approach to say, do we actually have an operating model that's fit for purpose? Do we have the tools that are required? And so we had to decide, are we going to try to build a tool? Do you buy? Do you build? And so we ended up in a place where we bought, but we were building with those who we bought from. And so I think that stress test, more so what's come out of it, less than the outcomes of the test itself, are the learnings around how we will firm up our data, around also just how do we build a guidance around this for other markets. So, as you know, we operate in 20 countries on the continent. This exploratory test was in South Africa first, but what we've seen and we've been engaging with our colleagues in other parts of the continent is that the Reserve Bank is engaging with, obviously with the central banks in other parts. And so we're seeing this coming through, that there are this heightened kind of view from the regulator. So I think it's been, for us, the capability building cannot be underscored, because I think linked to culture, once you mobilize people to want to integrate into it, then I think what we're trying to do is then to try and harness this excitement in the organization.
That's also exciting work that I know is working on the South African also when it comes to the presence, and also the learning approach we conducted, as well as we work on climate risk management. Before going to our other speakers and colleagues, if you have any questions, of course, that you would like to write on a paper, we'll make sure that a couple of minutes to collect them. In case we fail to address them due to time constraints, I'll make sure that I will follow up with email on responding to those questions. So feel free to write them on the paper. So we also heard challenges on data architecture, data solutions, but also how PCAF methodology is also used by our colleague Ghizlaine from CG. So maybe just asking colleagues from PCAF and StepChange, and maybe to start with Eslam, if you can maybe share with us and the audience some of the leading standards and methodologies when it comes to measuring, disclosing advanced carbon footprint reduction targets. So over to you, Eslam from PCAF, maybe could provide focus more on these three, which I think is high interest in viewers to understand the methodologies of that.
Thank you, Youssef. Instead of focusing, I would love because you introduced us with our football affiliation. Wrongly mentioned that in Mahdy fan, which is disagrees. But anyway, thank you. So I would just like to continue within that area of games. I'd love to play a little bit for just 1 minute or 2 minutes, if you may be with me, like when it comes to, we all think of standards and technical standards of kind of a bit of rigid systems. But one also may remember the games that the linguists use, it's called language games. In a very, very abstract manner, it refers to like one of the very full of this language games that say that the meaning of a word is its use. Sounds very naive and simple, but then to start to implement this rule, you will find how interesting it is. Think of, for example, of anything in that room like this lab that Dr. Wael is using. Lab could mean a laptop, could mean my lab, could mean a laboratory where we are doing some actions and so on. And this goes for everything, like, and it goes on for everything. And we speak still a very simple word about lab. And then this is, I guess, this language games, if you want to think of the sustainability-related financial disclosures, is a kind of a big, large language game as well, where we all try to come, as Shargiil said, for example, bring the same culture. And if you're going to bring the same culture, you need to use the same language. So if you're going to want to speak about a specific word, it has to be meaningful that this word has to be used within a context there. So for the sustainability-related financial disclosure, it started, I would claim it, and to be that important right after the recession and so on, to provide decision, useful, meaningful information for investors and all stakeholders involved. And then one may assume this is the very function as well of the today sustainability-related financial disclosures. We have the compliance, the regulatory frameworks, we have the voluntary set of regulations, and then we have the wide range of regulatory frameworks, one of which is very progressive of the UNEP, CMG, as you have just explained. And then when it comes to the scope 3, category 15 investment, I guess if we have seen that as a language, I guess everybody's familiar with it. If I were to say the word finance emissions, does it mean, I guess everybody would understand now this language game that finance emissions means the carbon accounting of the emissions associated with the loans and investments of financial institutions. And here we have two main leading standards to set the rule for this language game disclosure of carbon emissions. Indeed, the Greenhouse Gas Protocol, speaking scope 1, 2, 3, PCAF still under development, 7-8 years old, but has also set the rules of this language game, calling the finance emissions. And then PCAF offers a clear approach for that calculation methodologies of the finance emissions. I think you have mentioned a few chapters around that, and we may discuss that later on. Thank you.
Thank you very much, Eslam. Before maybe moving also to Badri, of course, I echo the role of carbon accounting in the role of the climate mitigation is certainly an important piece of the puzzle. And data, of course, there are questions and challenges in data solution architecture, and it'd be interesting to understand also from Badri, from StepChange, some of the main challenges that you encounter when it comes to, or banks encounter when it comes to transition into precise and real-time data platforms, and how banks can modernize their data collection processes in the field of climate mitigation.
Thank you. And thank you for having me here. It's a privilege and honor to spend some time here with you and share the stage with distinguished panelists here as well. What's been unique about our experience, and I think the daily joys of my line of work, is that we end up working with a range of financial institutions across a range of jurisdictions, right? And there are different stages of maturity on the CMJ process. So you see some who are very concentrated around coal climate capacities, but the ones who are able to meet the baseline progress very rapidly to the next two stages. And the key distinction in enabling that kind of accelerated development really is access to data infrastructure, and tools to make this possible. So to date, our company has assessed roughly $1.5 trillion in portfolio value. We help banks and financial institutions with tools and data sets to be able to accelerate their climate mitigation journey in some form or the other. And I think there are maybe three broad sets of challenges that we see. The first one is data granularity and the resolution of the that banks can usually find actionable. The second challenge that we've observed is that, precision and resolution of data comes at a cost. It's not a straightforward expectation that data at all resolution is equally useful, so there's a cost associated with it. And the third aspect really is one of what Shargiil and Boitumelo have discussed, this idea of cultural embedding and integration into bank systems. So maybe I'll just address them in that sequence, right? What we found really useful about the PCAF structure is that it embeds the notion of data quality within its structure. So there is a clearly organized approach to thinking about financial issues depending on the quality of counterpart data that you have. You have the capacity to use proxy information, sectoral averages, specific counterparty details to eventually report on what accounts as valid finance conditions. And we understand that every bank always ends up struggling with dealing with specific counterparts to acquire this data. So we strongly recommend that you begin working with data libraries published by PCAF, other public data libraries to get started with this. Because we often see data improvement as a 3 to 5 year process rather than something that happens correctly the first time around. And that's usually the right kind of approach to take. On the second aspect, on this notion of what the cost of precision should be, I want maybe what Boitumelo was speaking about this is that maybe it makes sense to apply behavior data. Maybe you want to pick the top 5 sectors that are relevant to your balance sheet. You don't need to necessarily begin an activity which covers 100% of your portfolio on day one. And we strongly recommend that you improve your resolution on each sector that you're able to work with and find new ways of engaging clients to be able to acquire data. That's generally worked favorably for banks moving down that journey. And interestingly, the data collection process, whether it's for finance solutions or client risk, is almost exactly identical. There are a few elements that get added here and there, but the notion that you need to have separate data collection activities independent of the bank's operations, day-to-day operations, is probably a fallacy. So you don't need to approach this as a unique standalone kind of exercise. So this leads me to the third point. This is essentially about how to think about data from an embedding kind of lens. This is what does it mean for your day-to-day operations, right? So lately we started seeing banks, specifically in this region, looking at ESG data as an extension of what you do with KYC. Right? You have regular touch points with clients in any case. When there's a loan that's coming up, if there's a new line that's being issued. So the process of collecting ESG-related information needs to be made as standard as possible in your regular life. We need to look at the collection of data as an activity which gets integrated into the source of the collection of data, rather than a downstream activity which is much later on as part of your sustainability reporting journey. So these are maybe the 3 things that we've seen generally work with banks.
Thank you so much, Badri. Indeed, the role of data is important. It's a question to be having. Before we address that, maybe since Shargiil will have to give us maybe to have stop, just a final question, maybe just on this morning, of course, we discussed the business case for sustainability from a bank's perspective. But we'd like to understand from an internal perspective, how do you internally balance profitability with your ambitions in terms of carbon reduction, especially for the high emission sectors. So what is the recipe that you actually implemented internally to?
This is my favorite topic to discuss. Right? So let me start by a myth that I believe that exists out there, right? And I think this is due to the first generation who really started the sustainability journey and wanted to create some attention around it, and somehow spread this myth that green is expensive. Right? So there seems to be a notion out there in the market that that green financing, to funding it, that the cost of that is expensive, and that's why banks need to offer cheaper financing for green. And this is a notion that the biggest of the companies to the smallest of the companies companies ask you as well, right? Oh, so I'm getting a green loan, so it must be much cheaper than the conventional loan I'm going to get. And the question I always ask is that, why do you believe that, right? And let's take this a classical example that we all would have tried or have a consideration in our life. Imagine you're about to buy yourself a new car, right? And you decided that this is now time for you to buy an electric vehicle. I'm not going to use the name of the American electric vehicle company, who is a persona non grata this time, but you decided to buy yourself an electric vehicle, right? And you go to your bank, and your bank is offering green car loan, right? And your expectation is going to be that it's going to be much cheaper, right? It's a standard product that all banks probably are offering at this point, is a green car loan. But why is that, right? Because you made the decision to get an electric vehicle, not because the price was going to be cheaper. That was an understanding. You made that active choice, right? It wasn't the 5 basis point cheaper loan that got you to change your behavior to buy an electric vehicle. It was an active choice you made before you went to the bank. Now, if you can choose between a conventional loan and a green loan, and the green loan is 5 basis points cheaper, of course you're going to take that. But that wasn't the incentive to begin with, right? And that's the same reason. If you have decided that you're going to build a project, a solar farm as an example, you're not doing it because the funding is going to be slightly cheaper, right? You're doing it because it's the right thing to do. So there's this myth about that, sustainability, green products needs to be much cheaper, and it's actually not the case, right? And even if you look at banks' funding models, green bonds, the greeniums that we used to call them are not significant. It's a couple of basis points, right? So I think that's the first part that's important to remember. And then when you're, as a bank's perspective, internally making these considerations, that how is it that your business case is going to look like for sustainable products? Well, the business case is that where is the demand, right? If you have one wish, if I have one wish that I would ask the policymakers to do is, if you really want to accelerate the transition, well, then start creating incentive for the banking sector to do the right thing, right? Because today, you find financing in Morocco, a coal plant versus a solar plant, the capital I need to put aside is exactly the same, right? So if we want more green investments, we need to make sure that we create those incentives for the banking sector that can support from that perspective. And those, unfortunately, does not exist today at a scale that are really making a difference. And I think that's an important part to bring to the discussion. But for us, when we look at it purely, of course, again, I think I mentioned this earlier today as well, it's important that we look at it by case, right? We do know that, sustainability, we need to make an investment in that, and we're making that investment because we believe this is the right thing to do. For us, we see some megatrends in the future. We see a big megatrend around AI. We see a big megatrend around energy transition. We believe that these megatrends are critical. We see a big megatrend around tourism as well. So for us, those megatrends are important, and we invest in those megatrends. This means that when the different cases are put in front of us, we might say, okay, this does not live up to that specific expectation we would have had at this point. However, we believe that this is the right industry, this is the right kind of project, this is the right megatrend to invest in. That's why we're going to do this. This is the same reason that we would at this point invest in AI. We haven't fully understood the full capability of AI, but I think that everybody in this room would agree with me that AI is the future, right? So if you have to invest in it, you would be investing in AI. Similarly, you have to invest in energy transition, right? And sometimes that business case is a little bit more long-term than your normal business case would be, right? Investing in existing technology where your break-even happens in 3 years, if you're investing in a energy-related project, your break-even might be 2-3 years longer than that, but you will still do that, right? Because that is the right thing to do. So for us, internally, when we look at these things, we need to have that short-term profitability in mind, but also at the long-term investment in mind as well. And these things need which means that we don't just close our eyes and say, we're only going to focus in the long term. We need to focus on short-term profitability. We have stakeholders around us that we need to address and make sure that we are aligned with their expectations, meeting their expectations, but at the same time looking into that how do we build a stronger organization, a stronger bank for the long term. That is also by doing those right investments in, as I mentioned, energy transition, into the AI and the other topics from that perspective. And I think that's the way we try to manage that aspect, to say internally for us to find that balance. That's how it's important.
Thank you, Bashir, for Shargiil, Bashir, for sharing these insights. I have plenty of questions that we have, thanks also to those colleagues who provided some written questions. Let me just turn it to our audience if you have any questions. We have around 20 minutes for that. Any questions? Okay, if I may, we can address the question, the written question that was asked to Eslam and PCAF while we wait for colleagues to provide questions.
Thanks a lot, Youssef.
If you can also say.
Yeah, thank you very much for the colleague who sent the question. I'll be reading first. What resources exist to facilitate at least estimates? What resources exist to facilitate at least estimations of financed emissions and lending portfolios, e.g., for emissions factor for the African market? I mean, very briefly first about the emissions factor. Emissions factor, they are themselves are estimation. They are not a direct measurement of the emissions. They are proxy data that is important to highlight because. Let's first very briefly to speak about the PCAF data quality score that Badri has quickly mentioned. That's one of the fundamental ideas and concepts that PCAF suggests in the PCAF data quality score, where if you may have noticed in this language, there's no data as bad. All data is appreciated, all data has a some sort of quality. But the quality of this data started as follows. From score 1, the best data quality was score 5. Score 1, following the PCAF principles, which is to seek the most accurate data, it means that the verified emissions of the investee, meaning that you are providing investment, providing lending, loan for a factory, and then that factory provides back to you a verified emissions report, verified by a third party. This is score 1. Score 2 is unverified, also again primary data provided from the investee. And so if those two are not available as a primary data, then the financial institutions may seek to use the emissions factor. There's different variations of them, like physical activity emissions factor. That's, for example, for a building like that, how many tons CO2 equivalent that each square meter of a hotel may produce per year, for example. And so on. So this is a very abstract way of what's meant by emissions factor. When it comes to the resources available to estimate for the emissions factor in Africa from PCAF, one of the resources that PCAF offers for its PCAF signatory, the financial institutions are committed to use PCAF, is the PCAF emissions factor database. A team of PCAF have collected it from publicly available databases. It's quite rich and huge, but one undeniably, it's also the quality and the coverage of those emissions factor varies across regions and countries. 2-3 years ago, there was not much or sufficient emissions factor for regions such as MENA or Africa, but this is not the case anymore. The emissions factor database of PCAF is being updated twice every year in March and September. And at the moment, there are sufficient emissions factor to start the estimation of the financed emissions for African countries, at least from quality score 5 or 4. The global average are already available. Furthermore, at each regional level, and if I may also mention that Shargiil is the chair of the PCAF MENA region chapter, and we have recently started the work on the PCAF MENA data working group, where we collaborate with the PCAF MENA signatories to see how we can improve the coverage of the MENA region countries in the emissions factor database of PCAF. Similar activities also taking place at the global level, also at the African level. So I hope this is sufficient. For the one who sent the question, if you're interested to get a demo access to the PCAF emissions factor database, I'll be more than happy to provide that. This answered the
Thank you so much, Eslam, also for offering the access. Maybe just to question maybe to colleagues Boitumelo and Ghizlaine. So I think Boitumelo mentioned your bank's climate policy and also some examples from sectoral climate work you've conducted. Can you just give us some insights on how you conducted or how you developed your climate policy, how you took into considerations the different sectoral considerations, and also for Eslam in the same line, what are maybe the key climate mitigation sectors you are actually, where you are pursuing climate finance or civil finance opportunities, perhaps in the coming year, knowing that the context in Morocco is marked by large infrastructure development. You can start with Boitumelo and then
Sure. I think the starting point, as I mentioned, for the development of the policy was definitely the context that we operate in, and so that is, I would say, the almost the linchpin for it. We also were very clear that it would have to be phased in its approach, because I think the point was made by that you would want to start with the most material sectors, and I think seeing the evolution from where our policies have developed from focus on coal to fossils to looking at other sectors, that was clear. So we identified the most material sectors and we started there. I think what was also very important for the development of the policy was that from the get-go, the policy was not owned by group sustainability in its entire development. So yes, our name is on the policy because we convene everyone, but I think it was critical that the policy is in development, obviously with the sectors, and that all the commitments and the targets in the policy are owned and understood by the sectors. And I think that has been a very important aspect of it, because from the get-go, the sectors, our colleagues in business with the policy, our risk colleagues, both from a group perspective and also within the business, understood and contributed to the policy. Important other factors for developing the policy was obviously to understand the sector landscape. So at that point, the idea of looking at transition finance and decarbonization or transition was still, I'll use the word nascent to say it was still kind of the beginning of saying this is the statement, this is the commitment for the sector. But obviously that becomes a very important part, because the trajectory of the sector determines really how we think about it and how we constitute that in our policy. I think also just being very clear, again, based on the needs that these sectors contribute to the development of the continent is very important. So you'd have to think about that, and that's why I think initially thinking about the commitments, then starting to think about targets, that's been where the challenge is, because to really move from understanding your exposures to then to actually understanding your financed emissions, and then moving on to actually setting targets against that. I think when you think about the journey of that, this is where we are challenged, and it's been I think there's been quite a lot of push from an external perspective, but it's something that we're working on internally, which brings the policy to life. And really trying to say that this policy is one that we've committed at a minimum we will review every 3 years, and we give ourselves that flexibility because the landscape evolves, technology advances, we understand the science and the sectors a lot better, so give yourselves that flexibility that the policy is an evolving, it's an evolving document, but it is the law within the bank.
So I can say that by the nature of our mandates, we have to accompany the national strategy regarding carbon or low carbon strategy or sustainable development strategy. So we identify the different sectors that are really the most materially important for the Moroccan country. So we are working on energy transition, on water scarcity, on sustainable mobility, as I said, ODB, infrastructure ODB, and others. So this is really the whole, if I can say, this is the shuffle of our strategy. So we identify different sectors, but the sectorial approach we are in the process to define our climate policy and the sustainability policy. So for the whole group, and we would like to implement as well different action plans for different branches and subsidiaries that will be implemented by representatives from subsidiaries. We have created what we call the filière, including 21 representative subsidiary representatives, who is really knowing the technical aspects for the sector. So who can implement the action plan, who can customize the action plan regarding the different challenges, weaknesses, and opportunities that the sector is representing. So at the group level, we are building, as I said, the policy, so the general one, which is aligned with the national strategies. But at subsidiary level and branch level, it will be the action plan customized and implemented by the different representatives. So when I arrived to CDG, so the topic was decarbonization. Everybody was talking about decarbonization, but what does it mean decarbonization? No one knows what it means decarbonization. We have the first capitalization in Africa, which is CDG development, which is a branch. So they are working on the territorial development. They already, with different subsidiaries they are having on their participation, developed product or developed industrial plans with decarbonization aspects. We have a new subsidiaries which is called INE, which is working on this like UNESCO, working on energy efficiency, renewable energy, in order to decarbonize the whole group, the whole entities, in order to set in place energy savings and to share the benefits from the energy savings and costs. We have as well a subsidiary working on the office constructions. So just to give this is really a success story. So for 100% offices, 100% neutral carbon neutral, they are sold out. There is a huge demand from international clients to be based in Casablanca, to be based in Rabat, with the offices carbon neutral. So this is really a great success story. So as I said, there is different speeds within the group. There is a different listening within the group. In some sectors, the approach is different from the financial investment part. For the investment part, we already have an ESG stewardship approach. So they have an ESG strategy. They are already integrating the ESG analysis and assessment within their portfolios. They are in discussion with the different investees to how to set in place an ESG action plan and policy. So in the financing part, some banks already within the group are already in advance because they are having the ESMS system in place. They are also developing a new financial products and services. So regarding the different aspects of sustainability and not only climate, so they are in gender, they are in energy efficiency, they are in mobility, etc. Within the group, we are trying to consolidate all these efforts and to make it in one framework, which is complex and huge and tough action. So to make it in one framework, to build together with the different subsidiaries the same trajectory, to have the same targets for 2030, and to define our percentage of emission reductions, which is not easy. We use different proxies for the different branches and subsidiaries since we don't have the data. So we work with the proxies, with the PCAF methodology. So yes, we are in the process of building everything, and I can really say that we have some subsidiaries really in advance rather than others in the ecosystem.
Thank you, Ghizlaine, and also if you consider opening these offices, you can consider Marrakesh. I'm sure the demand will be as twice as it was for Casablanca. Congratulations. Maybe we can take 1 minute each, and since actually I'm taking the opportunity of being next to some of the top voices and inspired persons working in financing in the region, then where we can kind of bank the question of we can share in a minute any, I would say, advice, reflections, insights from a personal perspective when it comes to working on this climate journey, which I understand is a marathon. It's a long-term work. It's an exhausting work sometimes mentally, but if you can inspire the colleagues who are working in the same field from the region, so where will also start.
Let me say one quick statement from the PCAF standard point of view when it comes to disclosure of the financed emissions. In the PCAF standard, it's clearly said that in the first disclosure, financial institutions are free to decide on the coverage of the disclosures. Meaning that the PCAF standard itself and the initiative, we talk about the two things like the initiative and the PCAF, the same thing, but anyway, like the PCAF standard recognize the challenge and the task, and therefore, in the first disclosure, banks may choose the most material, most important sectors to cover in the first disclosure with the available data quality score. And then in an incremental process, keeps adding the coverage and improving the data quality. As an inspiration, if you may allow me, Shargiil, I may refer to the Shargiil to the first disclosure with PCAF. They cover the most material 3 sectors, as far as I remember, aviation, power, and oil. And then in the second, there is improvement and then an incremental process. Thank you. It makes sense that should be the next speaker, if I may.
So is now I say that you need to sign up to PCAF? No. I'll say 3 quick things, right? I think first of all, it's important to get started on the journey, right? It is critical, right? So every day that goes by, it's one day too late to start on your sustainability journey. The second part, get the commitment from your leadership. It's going to be a really, really uphill battle if you don't get that support and commitment. The last part is that, which I think is still a big game changer. I think a lot of us has been a little bit, probably, I wouldn't use the word sad, but maybe disappointed how the things have developed in the US over the past 6 months and etc. from a sustainability perspective. But I'm actually more positive than I've ever been because we have the big unknown with this technology. And I think it's becoming more and more apparent that technology is going to play a role, whether it's energy transition, whether it's the transition journey for banks, or whatever it might be. The role of technology is going to be so significant that we cannot underestimate it, right? You know, the tools that get presented to me and my colleagues, right, that, you know, things we have spent, months and quarters on doing ourselves, PCAF calculations, calculating emissions, etc., that tools can do for you now instantly, real time, is just amazing, right? And these tools is going to be available to us very, very soon, right? And some of them are already there. So I think technology is going to be one of our biggest supporters in this transition, so let's not underestimate that role, right? So I think that will be the positive note I will leave about it. And those are the things that are keeping me really excited about the time we have ahead of us.
I think I want to echo that sense of optimism. If there's one thing that I leave this room to mull over a little more, is just this idea that a lot of the work that's taking place around climate risk, finance emissions, portfolio sustainability is extremely exploratory, which means it comes with a kind of joyous anticipation of discovery, and that automatically means that there's a lot of unknowns that you're dealing with in terms of the data that you're working with, counterparties and their readiness. I mean, recently we had this example with one of our partner banks where we started noticing that, for instance, a risk team which has been working on ICAP analyses for decades now, starting to grapple with climate risk is all of a sudden a little flustered because it doesn't have the same kind of certainty that you would associate with this process, right? So if you take an orientation that this exercise is going to leave us with certainty and immediacy of action, then that's probably not the right one. So I just want to echo what's come before me to say that the orientation we need here is one of exploration and one that's aided by the service of science and technology.
I think for me, the point is that at where we find ourselves now, given all of the developments, I think we are all used to working in complexity and uncertainty. So in my mind, this is just another wave that we're riding, you know. So, you know, when you're on a surfboard, the ocean sort of goes like this, and I think we just need to be primed for ourselves that this is a journey. You need to have a thick skin. I think we all have a thick skin as we work in this environment. So it's not to I guess let temporary distraction almost in my mind cloud a lot of the really good work and the necessary work that's continuing. I think you can change tactic, but the mission remains the same.
I have to say it in French. So, je dirais à l'audience ici qui travaille sur ce sujet-là, vous êtes différents, vous parlez un langage différent, mais ce langage différent va être du business as usual très très prochainement. Donc gardez la foi, gardez la passion surtout, et la passion, et être patient aussi. Je dirais que les tools are already available, so on n'a qu'à apprendre chaque jour, la réglementation change, les standards changent, on n'a qu'à apprendre. C'est une belle aventure dans laquelle vous êtes embarqués. Ça change le business model de tous les jours et c'est le business model qui sera recherché dans le court, je ne dirais pas dans le long terme, mais dans le court terme. On parlait tout à l'heure de profitabilité. Nous, en tant que long-term investor, long-term financial actor et long-term operator, on est dans cette optique de long terme. C'est-à-dire qu'on cherche la profitabilité à long terme. On sait pertinemment que ce sont des sujets, que ce soit la durabilité ou le sujet climat, c'est des sujets dont les retours sur l'investissement sont sur le long terme. Et c'est pour ça qu'on investit maintenant, pour qu'on puisse justement avoir les bénéfices sur le long terme. Mais gardez la patience, et gardez la passion surtout, et faites de votre passion votre job de tous les jours.
Thank you, Ghizlaine. Thank you very much. And my also inspiration kind of when we just enjoy Marrakesh. It's a beautiful city, and also connect as much as possible with the peers. I think they're like great lessons to get on all climate-related topics, all the UNEP-related thematics from this wonderful audience. And with that, I'd like to thank you very much for your participation today. Special thanks to Eslam, to Badri, Shargiil, to Boumaiz. Thank you.